Good morning, everyone. Welcome to the Euro Trade. I'm your host, Marcus Stalker D. I've been trading for 19 years, and I'm a commodities trader. So we're going to be looking at these metal markets, seeing what's going on. I'm leaning towards silver. I see someone is saying, what am I wearing today? Leprechaun, gold, copper, or silver blazer. Silver for now. But yeah, I started to analyze gold and silver. I didn't do the levels for copper, even though copper also looks pretty interesting. It's been battling that 6 evens number, and I do think that that's going to be still a pivotal area. So maybe we can do the copper levels together. Let's just adjust a few things here. And first thing that I like to do, marking Asia high and Asia low. So let's go ahead and do that. Now, silver and copper for now are perfectly respecting the ADR ranges, because if I look at where the ADR was to the downside, it literally just touched it and then bounced. So that's interesting. And that was also the Asia low. So what I'm going to do, I'm going to recycle this one and say that that's also Asia low. Massive call wall at 6 remains. So right now we're just rotating around it, with that 6 evens level being kind of in the middle of the range. So I would like to see maybe another pullback. But when it comes to the actual value areas, actually copper is inside value, whereas silver is the only one outside of value, so this is why I want to focus on that. Of course, we may have a different situation for COMEX and copper, because right now we're below value. You can see where the value for COMEX was from yesterday up here, and I call that the open sentiment. So we're below it, above it, inside it, and if outside, by how much. So that's the second part of the situational awareness. ADR high was located at 6069, but the one that got exceeded first was the one to the downside. So if anything, copper for now has a bit of a bearish outlook, purely because we went straight down. London is trying to reverse it, and copper is the only one who went into a failed auction and completed it before I was alive. So 6 evens, let's see what happens there. Now, silver also has an interesting outlook, but as much as yesterday I had the monstrous trade of like 800 ticks plus, today the gamma squeeze is not really on the cards. The outlook is neutral to bearish. So if anything, I'm expecting it to stay reasonably contained between, let's say, extended downside 77, and then 82 would be kind of the top part of it. But I wouldn't be surprised if we struggle to get above 80. If we get above 80 and we also reclaim VWAP, there is a late entry setup that might appear at some point where we can go and target the highs, the high of day, which is not quite the all-time high, but in a strong uptrend we expect all supplies and all highs to be taken out. So I wouldn't be surprised if we go all the way back up, then wick above it, maybe to 83, and then go down. But that's That's an extended view. Because this is all bearish to neutral to bearish today, I would be a little bit careful, especially after such a monstrous day. You tend to have these like hangover days. But it depends on the catalysts that we have on the calendar as well. We do have PMI later on. I mean, we have ADP non-farms as well. I always find ADP non-farms a bit weird because they're like projections. It's not an actual number. They're guessing what the numbers might be, and all of that looks pretty poor as well. So it could be a mover 15 minutes before COMEX opens. But for now, we're going to work with whatever we've got at the moment. We've got jolts. That could be a mover as well. Most of the metals are connected to the dollar. Copper is a little bit different because it will only be reactive to, very reactive to inflation connected releases. And we don't have those today. So this is why I'm kind of choosing silver, maybe gold as well. But yeah, I think silver might remain the focus for the day. Right, gold rejecting VWAP so far. Gold is still inside the initial balance, so it hasn't moved anywhere since the open. Silver extended to the downside and now is trying to retest the initial balance low. It's not quite there yet. So I'm going to put, let's put a little horizontal ray. So here's your IB low. But what's keeping me slightly bullish on silver, if we go lower, is the fact that the value area from London was reactive. We never managed to close even one 30-minute candle inside it. And in fact, we bounced from it. We also have ADR low. So in order for the market to go further than the ADR low, we would need some kind of negative gamma condition, so some sort of long squeeze, if you will, to really kind of push it past those levels. So I'm seeing this as an extreme of the day, and therefore I kind of want to be a buyer in this area, and maybe even a late buyer, like I said, if we go over 80 and then target the all-time highs. So it's it is a clear picture, but the possibility for huge, another huge day, that's a bit sketchy. So that's my view here. Dre Take Profit. There's a problem with the way I'm looking at things. If you notice, actually there's only about 3 or 4 cornerstones, if you will. And those 4 cornerstones are gamma exposure, along with gamma levels, obviously, quantitative extremes, value areas, and then time of day. So while it might seem complicated to you, I would guess that you're maybe somebody who hasn't been trading for 19 years and you have simplicity, and that's absolutely okay. It's just for me, every time I ran into times of the year when we had black swan events, and so far I've been through 4 of them. Whatever I was doing before then, it wasn't quite enough to figure out what's going on in the new situation. So naturally my skills grew as I was trying to adapt to those new situations. And the 4 events I'm talking about is, first of all, it was the credit crunch. That was the first one. I started trading in 2007. We had the credit crunch in 2008. Then we have the European austerity measures when Greece went bust. So they had to bail them out. That was the second one. And then we had COVID. And then finally last year we had tariffs. But by the time that COVID arrived, I was fully able to take advantage of a black swan event because of the way I started looking at the markets. Options levels have always been a part of what I'm doing, and even when I was doing Forex as a swing trader, I was looking for magnetic call walls and put walls that have like a lot of options there. Why? Because ultimately they have a lot of volume in there. So there's a lot of open interest. And especially once the options expire, there's a ton of volume that goes through. So not using that, I think you're not really seeing the picture. But again, it depends what you're trying to do. If you're looking for trades to last 2 minutes, does it matter whether there's a call wall there or not? Probably not. You know, as long as you can read the potential hedge that comes from the level. And if you identify that as a high or as a call wall, to hold it for 2 minutes, you're good, right? But I hold my trades, like for example, yesterday, I held that trade for nearly the entirety of the day. So I held it from about 1:30 a.m. in the morning, my time, all the way to the auto liquidator, almost. I think I took it off like 5 minutes before the auto liquidator kicked in, past the close. So in order for me to be able to find those trade locations on the days that have a potential for a gamma squeeze, I look at some things that are maybe a little bit more fancy than most, but it's just a result of the number of years that I've been doing that. And if you have a problem with that, this is probably not the stream for you. So plenty of other streams out there. Do I still play music? I would like to still play music, but if you've been here for any stretch of time, you may know that I suffered a vaccine injury that completely derailed my immune system. And as a result, I am sunlight sensitive and noise sensitive. And that prevents me from doing what I used to do, which is be a session musician. So at the moment, I'm not able to handle that. I tried singing, I think it was like a couple of months ago, and I had a mini crash as a result of that. So I was really tired, it took me a week to recover, and I was only singing for like maybe an hour, and it wasn't even like rock singing, like with belting and it was just like, you know, normal singing. And so yeah, at some point, if I ever get a little better, I would like to get back to music because I still enjoy playing. But yeah, it's a weird situation, so yeah. Yeah, Dre Take Profit says, yes, it's all subjective, 100%. This is just interesting how much information you're talking about compared to my way of trading, but nothing wrong with anybody's way of trading, just keep hitting take profits, exactly, yeah. The Elevated Life, I like your style, thank you. So do I. Makes me make money, right? Ken the Trader, wish I had your patience to hold. Yeah, so I never had a problem with holding trades, even when well, actually, that's not quite true. So I started off as a swing trader, and I only did that for 5 years. Very successful for me. It was like extended moves all over the place, euro dollar, yen pairs were amazing, and then I also traded a lot of GBP New Zealand dollar, so I came from Forex. That's what we all traded back in the day. And it was beautiful. That was my first 6-figure account. But then obviously the European austerity measures hit. Everything got a bit strange. The ranges pretty much dried up to like 30 ticks a day. And I was like, nah, I need something else. And that's how I went into prop. Then they tried to put me into like fixed income first. Didn't like that. Then they moved me to ES. That wasn't moving much either. Like at the time when I looked at the ES chart, it was moving like 20 ticks per day, like 4 to 5 points was the range. And I was like, why do people trade this? I don't get it. So they put me on crude oil, and I found myself in crude oil. Did that pretty much for 10 years. But over time, I added gold into the mix, which is why I'm very familiar with the precious metals and base metals, because over time, I added those as well. And it just expanded my knowledge and the situational awareness that I was already kind of using in crude oil. But in the first 2 months of me becoming an intraday trader, I thought, right, like anybody else, that I needed to do like a lot of trading. And I was sat next to this one guy who wasn't very nice, but he did have a point. So I was looking at a trending move. It was like a mean reversion move. And I kept jumping in and out on what should have been just one trade. But I thought, oh, you grab a few ticks, then you get out, and you grab a few ticks, and you get out. I thought that's how you did intraday trading, and I thought that was the only way. So then I said, yeah, okay, well, I made some cash, I lost some cash, made some cash, and in the end I was net positive. But he asked me, right, so in all of those 12 trades that you just did, what's your net result after commissions? So I looked at it, and it was an 80 tick move, but net, I ended up with 12 ticks. It was really crap, right? And he said, yeah, well, while you were hopping in and out, I stayed in, made 60 ticks, and only paid 1 round turn. And he meant that as haha, look at me, I know what I'm doing. And that irks me. So I was like, he's right. Damn, he's an asshole, but he's right. And then I worked really hard to match what I was already doing as a swing trader and trying to find a median way of holding positions for just long enough for slightly bigger profits rather than jumping in and out on every move. And over time, that turned into me being able to recognize the gamma squeeze potential and then holding until the cows come home, or more rotational days, which I think we're going to have on silver, even though the ranges are absolutely massive. But, today I'm not looking for, a massive move that's just going to keep going and going and going. So I'm going to be very aware that at 80, they could hedge. So maybe there's a neutral day setup there from VWAP ballpark. If they reclaim VWAP, then another setup, another hypothesis sets in for a larger move through this high to the ultimately the Asia high. Maybe looking for a little liquidity sweep above this inside high, them hedging, and then staying through the pullback, watching market structure and tape, and then getting up to 82. Am I going to hold it all the way to Asia? I don't know. Maybe not. Maybe yes. I don't know. Then on the other side, we could have an issue of going back to initial balance. So initial balance might be too difficult to break. And then we go back down to ATR low. Perhaps even wake down to this large call wall at 77. But that's probably going to have to happen closer to COMEX time. Maybe even during the first couple of hours of COMEX. And at that point, I may want to look at some more longs. But for now, the way things are, we're not looking at holding for hours and hours. So I'm going to limit my profit targets to 160 ticks. And we are working with 825 ticks of average range for the full 24-hour period. Therefore, grabbing 160 ticks, it shouldn't be outside of what the market is trying to do. So right now I'm just looking at how the market is behaving around some of these levels. We're not at any levels that I'm interested in at the moment. However, if that changes, obviously I'm going to do a smaller trade, and then I'm going to close it before COMEX because it's not a squeeze day. Does that make sense? Why don't I copy trade? I find that copy trading, especially for me, whenever you're gonna end up, or I end up in live accounts really quickly. So I was live twice. So the first live I held for over a year, and then I was buying a new house. So naturally I wanted to do something there. And the second one, I was on the legacy dashboard, and they were saying, oh, we might be moving the accounts, and I was like, okay. So I decided to move everything to the new dashboard. But generally, the way it's been traditionally, I rarely spend more than 3 months in XFAs. And that means there's no point to copy trade at all, because you're going to end up with one account anyway. Even when I have multiple XFAs, which I do at the moment, I have 3 of them. I have 2 150Ks and 1 50K. I just find that copy trading just amplifies the losses to the point where you don't have the diversification. So all you're doing is taking a punt on, and especially the way some people trade. I don't trade like that. I'm pretty careful and selective. But, they go through blowing up 12, 15, 20, 30K in one day, one bad day. So I'm actually against copy trading in that regard. I use multiple XFAs to trade multiple sessions. So for example, if I'm looking at an Asia trade, that's maybe one XFA. If I'm maybe looking at copper and or gold, I might use another XFA. I won't use the same one. And then the third one, I never have more than 3. I basically have one where I trade a little bit of everything. So I don't like copy trading. I think it's a good way to scale up, but I also think for the beginner trader, all that does is it massively amplifies your costs. So a lot of people trade with dollars in their eyes. They don't trade from the risk mind perspective. And they sometimes buy, a bunch of accounts just because they're cheap from certain places. And then they're looking at an upfront cost without proof of concept that what they're doing is actually successful. They're just like, oh, I'm going to be funded with like 150K. Oh my God, it's so much money. But that's just the beginning. If you don't have the consistency, the discipline, the confidence to maintain those, all you're doing is running up your initial cost to over $3,000, which is crazy. You might as well just take those $3,000, chuck it in your own account, and blow that up, because the outcome is going to be the same. You're going to lose it. So I'm actually really vocal, and for the same reason, I'm not really into the whole straight to funded accounts, because it amplifies the costs for the people. And if you look at the failure rate, which is 97%. Let's not beat around the bush here, right? 97% of people are struggling. So it's either that they're doing something wrong, or that the idea of trading is wrong en masse. And yet, this is all playing on your high on hopium moment, get rich quick scheme, skip evals, don't do any proof of concept, rush into a kind of funded account. That's a terrible way. And, to be honest, I was a little bit, I was not very happy when Topstep went to 2 days, but I understand why they had to do it. Because when I joined Topstep in 2015, yes, I've been with Topstep for over 10 years. Hello. I was their first funded female trader. So I had to do like 10 days of trading before you would get funded, and then you would go into step 2. So it was a 2-phase process. So before you get funded, you needed like 2 solid months of trading. Ask yourself, can you do that? Because that is what's required to maintain an XFA and a future live account. But for me, because I inevitably end up in one live account, copy trading is just... It's not realistic, because then as soon as I get into live, all of that has to change. I suddenly have a daily loss limit, which these days is bigger. Like last time I went into live, it was still a $3,000 loss limit. And as soon as I run up the balances to like 5, 6, 8, 12K, I start to work within that balance with not much regard to daily loss limit. Why? Because I'm using number of trades per day instead of a daily loss limit to cut me off on the day. And typically I like to, I set it to 13 in these accounts because I like to scale in and out if I'm in with more than one. So that is counted by the platform as like 2 or 3. So I need to make sure that my 3 to 5 setups per day are really, 10 to 20 trades per day, the way the platform does it, right? But yeah, so copy trading is a two-edged sword. I think only experienced, confident traders should go there. Why? Because it offers a good way to scale up. At this point, I'm not scaling up anything. Like, to me, if there's profits, awesome. But I'm not like living on a breadline where I'm, depending on the next payout to bail me out or some of the bills and financial troubles, right? And many people do that. And yeah, it's not good. So there's a number of pet peeves that I have over copy trading, straight to funded accounts and all that. because I think they are unnecessarily increasing the upfront costs. But take it as you will. It's your money, do whatever you like, man. I'm just saying, if you don't have proof of concept, if you're blowing out of XFAs within like 1 day, 1 week, maybe spend some time doing the evals. They're cheap. You can reset for peanuts, and it allows you the moments to reflect and to fish for your weaknesses and your little trading gremlins that are still causing trouble. Don't feed them after midnight, and don't get them wet. Trader X6 says, new rule in effect in regards to payouts. What are your thoughts? One bad trade could take forever to get next payout. So why have one bad trade? It comes back to the discipline, right? So why are you sizing up? Why aren't you using the rules to limit you to a particular default max size, which should be a part of your risk model? Let's face it, right? Like, for example, here now I have a rule not to go over 3 microsilvers. And when I start the new XFAs, without any balance in there, I will limit the silver micros to 1, and GC to 1, MGC to 5, and copper only micros 5. Why? Because it's a bigger contract. So even if I accidentally click a larger size, or I get a little bit excited in the moment and I'm like, oh, I'm going to add, and I click the rules and not the risk settings, just say, computer says no. So, yeah. Don't allow yourself to do that. That means your skills need work. But in regards to getting a payout that's bigger in balance than your previous payout, I don't think that's a big deal if you're a consistent trader. And if you're not, yeah, it's a big deal, because you're like, oh, it's my money, I want it out. Yeah, but the whole point is that you work on your skills and you work to push the P&L curve into positive before you pay yourself. So whilst it is absolutely a risk limiting rule for Topstep on XFAs, because we don't have that on live. Okay, once you get into live, that rule, well, it's like you can take your money, but you get daily payouts, you get like certain benefits that you just don't have on the XFAs. I've even gone so far to call up the risk team and to tell them, can you lock up my account from this time to that time, when I was going through a crude oil drawdown? Because I just didn't want to trade it during times when I identified that crude oil wasn't doing what traditionally was doing around there. So here you can only do it per day, whereas they can do it on the back end, so that lockout on the live is just happening every single day. So you get to work with the risk team if you wish. They're not forcing you with a stick. They're not like, you have to call us. But they will be there, to protect any profits that you've made. You have a massive day, they'll be like, hey, let's try and not give this back, because it's a good day, man. But yeah, ideally, you do want to make sure that your P&L curve is in the positive. If you end up in a drawdown, not one bad day. So I'm not talking one bad day. I'm talking you get yourself into a drawdown because the market conditions change and suddenly you can't make it work. Well, that's your sign to size down. And you'd be surprised how much low size builds up over time. So you just get up, keep doing 1 micro, make 50 to 100 in a day. Do the same thing. Before you know it, after the month is over, you're now 2 or 3K up. But all the while, you're removing the emotional stress on yourself by trading with size, being in a drawdown, or having that one bad day affecting the psychology. You can work on yourself. And then once you're over that, and look, it doesn't have to be much over. It's just like, well, the balance should be higher than the previous payout. So obviously if you took an enormous payout and you didn't leave much, it comes to bankroll management at that point. So you should always leave enough cash in there to still have working capital So all of the money that we make, I don't look at that as it's like, oh, it's all of it is my payout. I look at it, what part of this is my working capital, and what part of this is the payout potential. So I have a couple of rules there. Typically, I like to have at least 8 grand in there, and then I will take 20 or 30%. Anytime I have a bigger day, I will try to take 50% only of that day, not the entire balance. So, it's bankroll management. But what I see people doing is they are paying themselves. They get to 5K, they pay themselves 50%. So now you're working with 2.5K balance. But they still don't want to size down. And then they have one bad day, all of that goes down the pan. After a payout, you have to size down. So think about all of that. How you manage the money is the name of the game here. And if you're not doing it correctly, you're going to get yourself into trouble. You're going to keep losing accounts. Get a payout, don't size down, have a bad day, then spend the rest of the time trying to dig yourself out of that hole. Working very hard, all the whilst being very stressed out. Why do that to yourself? So, I generally take 20 to 30% of payout of whatever is in there. And then I very quickly build it up because I know that I can keep going. And again, with the way that I trade, it's a lot of ticks, even on very small size. I prefer that. So rather than big size, small ticks. Sounds weird. I go for a small size and a lot of ticks. And to me, that works much better over time to be sustainable and to not have huge P&L swings and just to keep things relatively smooth and in relatively low variance over time. Time is the only judge of anyone's performance. Whether you mismanage your bankroll or whether you mismanage yourself or the sizing, that all to me just spells amateur retail, not thinking about the risk model, not thinking about max default size in relation to the account balance, not thinking payroll, not thinking as a business, even though, running it as a business, it's not quite the same. Trading is a little bit weird that way. But there are certain components where, yes, you do need to look at some accounting aspects of how much money you've got in there. So I'm not against it. I think it's a good rule because it will it's supposed to make you think about bankroll. And if you're only seeing it as like, the prop firms are against us. Look, prop firms have a lot of people on sim funded. And naturally, they need to manage risk. Otherwise, they won't be here. So what would you prefer? That the firm is just like, you know what? We're going to have uncapped payouts. We're going to have daily payouts. We're not going to limit any kind of caps in the sim funded. And then before you know it, the numbers don't work and they have to pay out more than they've made. What's that going to do? Because there are profitable traders out there. Those 3 to 5% of people typically make a killing, right? And they will be the ones, they will be technically a risk for the firm because that's money management, right? How are you running your business? How much is going out? How much is coming in? And when those two stop working together, the firm goes under. So Topstep has been around for a very long time. They know what they're doing, and they have to manage certain risks that go along with it, So would you rather that they manage those risks, or do you just want to be looking at yourself and not looking at the bigger picture and just going, this is bad for the traders? It's not bad. It's like, it's a good rule to have because it will force you to get better with bankroll. At least I think so. And, I don't think I've taken a payout whilst in drawdown because it's like, well, what's the point? It never even occurred to me. It's like, I haven't made any money. Let me take a payout. It's like almost like rewarding yourself for being a sucky trader. It's like, don't do that. So, yeah. Trader X6 says, I have taken about 15 payouts the last 6 months, but I lose my XFAs in one day because of size and XFA gone. One bad day. That's not supposed to happen, man. So you're obviously able to make money. So after a payout, size down. It's not forever. It's just literally like, for a week or two. So that would be an example of somebody aggressively taking payouts, which is a great thing. Just be mindful of how much money you're leaving in there. Because if you don't leave enough money, tell you what, do this. Have a look at what your worst day is. And then make sure that the next time you take a payout, you have twice the amount of your worst day left in there. That could be one way of looking at it. I mean, there's a million ways of trying to adjust to your behavioral quirks. It's not the best thing to do, you know. Ideally, you don't want to have one bad day and lose the XFA. You want to have 10 days, 20 days, and then lose the XFA. So really get yourself into a drawdown period. It's not just an isolated day where you're malfunctioning, but instead it's a day where, you know, the market conditions change and then they don't come back. And then every day you're like, this is still not giving me follow through. This is still sucky price action. This is still this is that. So, you know, it's, again, it's one of those things that you can look at as data and then figure out what you need to do in order to A, get better, and B, to make sure that next time you are managing post-payout trading habits, which is something that maybe you haven't thought about. How do you behave after payout? Are you like, oh, I took a payout, let me keep going? And then that is like extra productivity, extra motivation, which does what for a trader? Over trading, wanting to trade more, eager for more. And that's, I would argue that that's a form of overconfidence. So, you know, just try to rein that in. Maybe don't trade the next day. Maybe leave it like 3 to 5 days before you go back to trading. And make sure you size down, lock up those risk settings. You know, you can lock out the risk settings for a day. I'm hoping that at some point we can lock it up for a whole week, or lock it up for like a specific period during the day. So it's like you can maybe mess around with it after midnight, but during the working hours you can't mess with it. So whatever the day does and you don't respect the risk rules, you will be locked out. So I'm hoping that that's going to come at some point. All right, so gold is still inside the initial balance. Silver is still struggling around the initial balance low. But for now, this is not really, like, there's some people doing a bit of size. So I'm seeing silver, they are selling it around 79,120. And so far, not being very successful at pushing it either side. What else do we have? We have somebody who sold 18. Sorry, no, they bought it at 18. Okay, 18 contracts at 79,305. But that was also not successful. So obviously we have some sellers here absorbing the buyers. And same thing in gold. But the volume is very low. So if I look at how we're looking on the volume bars, we are below the average volume. So until that changes, any setups that we do, it's going to be like an uphill struggle because you're not going to have enough volume to push it either way. So that needs to get better. They're probably waiting for these numbers, actually, because London is not super lively before about 11 a.m. my time, which is not going to happen in another sort of 15 minutes or so. But yeah, so far, initial balance low has been resistant. But at the same time, you can say that we reclaimed 79, and 79, do we have some open interests? Yeah. Could I give you some levels on gold? Okay. Yes, I can. Right, Daniel Mosley says, real talk, I needed to hear this. I have 3 XFAs that are all payout ready, but each of them are adjusted 2K profit level. I want to get paid, but also want a buffer. Run that up to 5K, and then take 1K out of each of those. So if you really want to do it the way I manage my bankroll, that's basically how I do it. So at the very least, I need to have 5K in there if I'm going to take $1,000. And but you know, because I've been trading silver, the gains are a little bit bigger now, so I'm looking at 8 to 12 before I take a payout. Right, so gold levels. We're just going to go up to a 30-minute time frame. Right, so Asia low, wick, liquidity grab, and reversal already done. The next area that I might want to consider shorting, because it is a mean reverting condition, it is positive gamma on gold. And so far, let me just do something here. Positive gamma on gold, and it is very likely that there's going to be more hedging around 4,500. But Asia high is up at 45.13. If I manage to, like, let's say I was going to trade gold. I'm not, because I want to trade silver today. But let's just say I'm looking at taking a position. I would be looking at longs until we get to 4,500. If I'm not able to come up with any sort of an entry, and that entry could take the form of VWAP holding above, maybe retesting VWAP and then going higher, we cannot stay in a range around VWAP, which is what I think is going to happen here. If we get a range around VWAP, I do not want that, and I'm going to wait for later on in the day. As you guys know, guys and girls, I am pretty selective with the types of trades I take. I don't just click buttons for clout. So yeah, if we get to 4,500 and I don't have anything else, I will be looking for 4,500 to be resistant for a little hedge. But I'm not going to be super aggressive on holding that, like holding times wise. Why? Because gold is still in an uptrend. So if we look at the daily, they're just starting to move back towards this supply at 45.25, let's say. But the Asia has set the tone. If we go back below Asia low and then reclaim the range again at some point, that would definitely be something to look for. However, further down, let's say we slip, numbers come out, there's a bit more volume, and they start pushing it lower. I don't want to do anything until we at least hit 44.10. So I always allow myself 10 points of leeway, just in case that they start that hedging behavior before they actually hit the call wall, because sometimes they do that as well. But if they do hit the call wall, I would expect them to defend it pretty fiercely and then to have another long setup from there. Ideally, I would like that option to happen closer to the Euro close, to the London close time, which is hours and hours away now. That usually happens at 4:30 p.m. my time, and that is 10:30 a.m. Central. Yeah, just checking my time zones. But yeah, mini shorts at 4,500s. If that doesn't work out, so if there's no sellers, if you don't see like a sweep and then they start to plow in with large contracts to the downside, then I would stay out of that. So obviously I like to look at tape and how real-time order flow is working. But at that point, we will also have, let's say that we don't go lower past the initial balance low. So let's also do some markers here. We're still inside the initial balance. So gold has not made a move at all. It's just a rough marker. But yeah, still inside the initial balance. Let's say that we go below it, then reclaim initial balance, then go higher, hit 4,500. At that point, we would have a neutral day type. Why? Because we extended the initial balance to both sides. At that point, if there are no single prints left when we are going above VWAP, above the initial balance, I would be very much inclined to take the short from 4,500 down to initial balance low, maybe even back to VWAP, wherever that ends up being at that time. Because neutral days without single prints on either side, unless it's excess from the longs, right? So they basically have a buying wick below the initial balance. Buying wick below initial balance is fine, but if we bust through the initial balance high and leave, call it an FVG or whatever the hell you want to call it, but I call it single prints, into the 4,500s, that would be like, okay, we're probably going to go test the Asia high. But if we don't have single prints, then 4500s as a neutral day fade before COMEX becomes very possible. However, it has a limited profit margin because it's already a neutral day, and really you're looking for a return into the middle of the profile and or VWAP, whichever one is closer at the time. So it becomes more like an extended range play, but it's based on the fact that we have a lot of interest at 4500. Like 4500 is still a big call wall resistance. And it's all calls. Like I don't see, okay, puts are up at 45.15, but everybody's long, like at different strikes and stuff, but everybody is long. It's still very bullish. This is also why you want to limit the shorts unless something very obvious happens in the structure. We don't have that. Daily looks super bullish. 4 hour, little less bullish, but I would say this is more like just a little pullback. It's not breaking any lows. It's not breaking any structure. In fact, they touched the low, immediately reverse from there. So this would need to markedly change in order for me to be like, okay, now we can run a negative gamma on a day like tomorrow or Friday. And then we have negative gamma conditions and we can just keep selling it down to this gap. So there's a little gap here. There's a weekend gap. But those are my levels for now. I'm expecting rotational day, mainly contained inside the Asia low and high. So I'm not expecting some mad squeezes outside of those. And I'm expecting 4500 to be reactive. And if we can somehow find a rotational moves from the edges of this range would be the ideal setup. However, outside of that, 4500 short might be a good one. Is there any other levels? Let me just have a look at monthly options for a second. And then silver is similar, rotational. I need to scroll all the way down. Okay, let's have a look. Gold. Just looking for monthly options data. Because I did that before we came on. Alright, so levels. 4400 is a massive call wall. 9,000 open interests. 4500 also extremely significant. When I was doing my number scrunching, it was 5690 open interest. That's a lot. And then really 4410 is, I suppose, it's got, 2,000 open interest, but it's so close to that 4400 that I don't know whether that's going to be enough. And then anything else in between, nothing really. Nothing of interest. So this is kind of like a dead zone where there's not too much open interest. It's very thin. So we can easily rise at least to 4,500 before they hedge it. And I say it's mean reverting because the dealers, when the whole thing is in positive gamma environment, any of the open interest strikes are used by the dealers who are usually short gamma themselves, long gamma themselves. They will use those levels to hedge effectively so they can get as close to being delta neutral across their positions. So they typically have one core options position against the majority of the investors, and then they will actively hedge in underlying futures, outright futures, to generate transactions that generate liquidity for the rest of us. That is their function. So when they're hunting a stop, they're not hunting a stop, they're hunting the high. It's your problem that you're placing your stops right above the highs or right above the lows. So give it some room to breathe because they will hunt that intraday. When it comes to larger time frames, that happens less. So it happens that you come across a demand area and they may not go to the extreme of the range. I just need to send my husband a text because I just realized I didn't give the Cavalier his meds. And Cavalier is a cardiac patient, so hold on. Yes, because I was getting ready all the other Muppets for the daycare, and I totally slipped my mind. Yeah, we have the Cavalier on some, like, it's a miracle drug, man. It brought him from the brink of death. He's still coughing, but we put him on this new drug. Like, he's obviously on other drugs, like Vetmedin, and he was only taking Vetmedin for his heart for like 3.5 years. And he started visibly struggling about, I think, end of November. So we took him in for an echo. It was... they found fluid around his heart, but it wasn't like choking it out. It was just, some fluid in there, but he was obviously really struggling, the poor boy. So I was like, what can we do? They put him on diuretics. They didn't do much. And then I did some research and found this drug that is actually used in humans called Entresto. So I said to my vet, can we try that? And they're like, well, we want to exhaust the traditional options. And I'm like, he's a 13-year-old King Charles Cavalier. He doesn't have time for you to... So I said, can I just get this and give it to him? And she said, I suppose it's in your right. So I put him on it, and with her dosages and everything, and he livened up. So we did a scan 2 weeks after that, and they said, oh my God, his fluid is minimized, and we did all the bloods and everything. So he's basically bounced back, and he's doing pretty well considering he's in heart failure. He's back to having his energy. So, I thought a month ago, you might have seen me, I was very serious. And I was like, oh, he's coughing, poor boy. I'm probably going to lose a dog. And he's been with us for 13 years, so it's not easy. And now it looks like he's still here. So we may have another few months with him. How long? I don't know, because he's an ancient Cavalier and they... typically don't live this long. So we already won. He's already over 13. All right, so initial balance causing some trouble. Are there any levels in silver there? Let's have a look. Let's go back to silver. I'm doing like weird songs that don't exist. Yeah, it's a doggo. It is a doggo. So I have 8 dogs, if you're new here. Literally 8 dogs. Shion says, no trade today. Well, I did a monstrous trade yesterday where I grabbed over 800 ticks. I wanted some sleep, man, because I've been trading Asia a little bit too frequently. And I felt absolutely wrecked. Absolutely wrecked. So I was like in bed at 9 p.m. yesterday. And I'm like, I'm not trading Asia today. Don't care what happens. No trade yet because I'm waiting for bigger levels because we are in mean reverting stage. So me getting involved in the middle of the middle is not something that I do. So no trade yet. I'm waiting for ideally edges or ranges or reclaiming VWAP above 80. Anything in between that, to me, is like losing my mental capital for too many trades and not enough cash. And to me, I'm looking to trade as less as possible for as much money as possible. Not the other way around. Not doing 100 trades per day for 400 quid, $400 or whatever. So if I can kill, one trade on silver for 30-40% of the range, and yesterday I took the majority of the range, which is crazy. That was a great day. But it's not going to be every day. So to me, to come here and go, yes, let's go! That's just like extra productivity, motivation working against me, and I'm very aware of that. So I'm not one of the people who has a bad day after I've had one of the best days ever. So last 2 days of the year, I did 2.8K, I did 4.2K, And then I started off this year a little bit quieter. So I think the first day was, well, actually, we can have a look at it. I think this is the account. So it started sketchy, okay? It did start sketchy. It didn't start smooth at all. You can see, first day. But I kept it to sort of 1.5K loss. And then last couple, there it is. So, you see that? Last couple of days of the year, you know, sketchy, sketchy, sketchy. Last couple of days, awesome. This month starting off better, right? And, no, this isn't the one. So, this is another XFA. Okay. So, yeah, this is my all-in XFA. Okay, I'm on the wrong account. Brilliant. Again, I had a lot of stuff going on today, so I didn't even check what account I was on. Like, yeah. I think this is the one where I do a little bit of everything. But yeah. So whenever I do like a massive day, I don't go into the next day going, yes, let's get more money. I'm like, okay, now we need to be careful because we made some cash. Now we need to like just chill, right? We need to chill. And like I said, I split XFAs by sessions. So some of them, one of them is all in. I think this is the one. And then I have two others, but whatever. Today my 4 dogs were going to doggy school and they were barking. They were super excited. I didn't give the Cavaliers meds. So it's all starting a little bit chaotic. And I have to be careful that that doesn't take away from my attention, which it obviously is. So we got to be careful. So I'm not rushing. I'm looking for bigger levels to come in today. Being very mindful that I want to keep all the cash from yesterday and obviously the end of the year in this account going forward. So, and yes, like most of you, I was affected by the issues. So I had to start all over again because I couldn't have closed positions, and then those XFAs unfortunately went away. So just like you, we also get affected. We didn't get a free pass just because we're working here. So yeah, I'm also waiting to see, you know, what happens, whether I get those XFAs back or not. But in the meantime, I have some new ones. So we start again. But, you know, none of that really bothers me. I'm not like, oh my God. However, every time I have a big day, I don't want a situation where I'm like, let's go into a big day after a big day. And then you do stupid things and then you end up losing all of it. So it's like, really? You don't want to roll your eyes at yourself very frequently. But yeah, I'm looking for a retest of Asia low, maybe 78. If we get an extension of that, again, 77 would be the level. Alternatively, we have to either hedge at 80 or reclaim VWAP above 80 in order for us to go back to 81, 82, maybe wick through Asia high to 83. But let me just have a look at the levels. Because again, my husband was feeding the meds. Again, I got distracted. Sometimes it's very chaotic in here. It used to be like before we had 8 dogs, my life was very calm. So I really understand if somebody has a chaotic life with like a bunch of kids running around and stuff. It gets very difficult. So all right, so where are the levels? Oh God, what's going on? Just want the open interests areas. I'm just going through my little algo that spews stuff out for me. Right, so probability summary, no. Almost there. All right, here we go. So elevated implied volatility. So that continues. So they are expecting bigger moves, but we have a massive range in force. 825 average, which means that some days went over that. Other days were around that. So we still have an elevated range. And what does that mean? It means that the elevated range, you will have 800 ticks to play with. Should you hold for all 800 ticks? Probably not in a mean reverting day. But the first area right now. I mean, you can even see it here, right? So we opened pre-market London. What happened? They got to 80 and they hedged. So already that mean reverting nature is showing up. I wasn't here to trade that. I was still asleep. And then, you know, I was definitely asleep here. And normally if I'm rested, I might get up at 6 and actually try to get this move. But I didn't do that. So what's the other option? The other option that is that we go back there and do the same thing later in the day. So that would be my one hypo. Longs after another pop and a reclaim of Asia range. Second option, another hedge from 80. But we've already done that. Twice, in fact. So go back to it through 80, get to 80, go down to 80R low, create the Asia high, wick it, go back to the call wall. Okay? So that's all already several times, you know, they've done that. So how many more times can I expect this call wall to be reactive before they go to other open interest levels? I would like to be dibs, you know, first dibs on the first test of 80, not a millionth test that reduces the probability. So right now I don't have a good setup. So I want to wait, being mindful that I had some big days recently. So I'm like, need to chill out. I also had a short option on crude oil, which was amazing. But never mind, that's just like other stuff that we can't do at Topstep, so it doesn't really matter. But yeah, so secondary option, like I said, is to reclaim VWAP. Is that the best setup? It's more of a continuation setup with a view that we're targeting Asia high, ADR high again. Once we are at Asia high, if we're there today, there is another opportunity for a mean reversion, so maybe they wick it up to 83, which is also an area of some open interest, and then another liquidity grab and reverse. But again, that has a limited profit target because it's against the entirety of the trend. One thing that might work for us is that will be busting through all-time high. Whenever that happens, typically the buyers need time to build up the power. So they typically fail after popping the all-time high. So while it looks dangerous, if you have a strike level that's above the all-time high for some reason, they will hedge there as well, because it is a mean reversion. There is no gamma squeeze potential outside of the Asia range yet. That could change. You know, you go below Asia low, and especially if we go below the call wall, that will be a significant enough move to the downside. So yeah, I would say if we go below 76.70, that would change the entire regime, and in that case, a negative gamma condition and amplified moves become possible. We still have a lot of calls at 75. We're going to look at like massively extended targets within the two distributions, two standard distributions. If we get a change of the regime on the day, that is a possibility. But right now, we have no such thing. We're literally just mean reversions, smaller profits. So to me, smaller profits means 160 ticks profits, so sticking to 2R, using relatively wide stop losses of 85 ticks, because if you have an 800, you know, you have an 825 ticks range for an average, using really up to 150 for a stop is not odd, depends on what you're trying to do. But there are ways to minimize that somewhat. And for me, on prop accounts, I don't like to use more than 85 ticks for a stop on silver. So in order for me to have that stop loss, I might drop down to a 2-minute chart. So hypothetically, let's say that we get down to Asia low, we wick it, and we come back. I want to see something like this. Or even, okay, this is a weak one, but I want to see that we go into a strong 2-minute bar, something like this. So if I point out this structure, it's a 2-minute bar that has no selling wicks, and it takes out at least 3 previous trending candles. In this case, it took out previous 4, not quite broke the structure to the upside, but this is basically what would be good enough for me to push me into a long at the point of interest that I'm looking at. That will be an entry. And then what happens after? It means that the buyers have enough power, and then after that I'm just watching for follow through on tape. So I'm watching for consecutive, mainly green bars to keep stepping in. And the volume doesn't necessarily have to be continuously increasing, but it does have to be above the average. And then when the steam starts to run out, that's when you exit. But it also depends on what you're trying to do and what's the time of day. So if I'm looking at a euro close wobble to the short side, I might actually just stay in that and not close the trade, but be mindful that there is a sell-off run, like basically it's enforced hedging into settlement. And then withstand that typically in a swing trade. However, today I think if I'm using 85 ticks for a stop, 160 ticks usually gets reached pretty quickly for me in my terms, meaning 15 to 30 minutes time, which is in stock contracts with me holding a trade for, most of the day. Why not trade a personal live account? I have a personal live account. Well, it's not okay. So I have a personal live account, which is not, it's at the moment it's sitting at, I don't know, about 160K or something. It's not massive, but I do take payouts. I call it my YOLO account. And then we have a corporate account, which is not in my name, but we do run our algorithms there. So it's in the name of the company, one of the companies that I own. So yes, I do trade that, but I'm more of a quant strategist. I'm not like the one clicking buttons. I also have an options account, both with the Interactive Brokers and with Tasty Trade for different reasons, because Tasty Trade actually has some micro options that are not available on Interactive Brokers. So I trade crude oil options once every 2-3 months when we're at the edges of larger ranges, or I identify there's something going on. So I absolutely do trade my, let's say personal accounts, but I prefer prop. I do prefer prop for like running income, extra trinkets that I want to buy. This camera, FX3, was bought from prop trading income. This entire computer, prop trading income. The lights, prop trading income. So you get the picture. And also bickies. We have to have expensive salmon bickies for the doggos. That all comes out from prop. I'm not in favor of having one source of income. Let's put it that way. I like to have loads of them because it's much easier, and it just kind of drips from all sides, and you're never left dependent on just one thing, if that makes sense. So, my dad was a pretty wealthy man, and he instilled that in me from the very beginning. And I only made that mistake once, where I stopped doing session gigs, and I decided to go full-time trading. I was still profitable, but I had a couple of months where I was in a drawdown. Psychologically, it absolutely destroyed me. So I never want to feel like that ever again. I want to feel comfortable. I want, and I was always somebody running sort of multiple businesses apart from that year when I was like, I'm just going to be a full-time trader. It was the stupidest thing I've ever said in my life. And since then, I've worked very hard to develop other things. At one point, we had an IT recruitment company, which was completely not related to trading, but related to finance and banking. I even worked for an agency at one point, just to kind of learn how to recruit better. And I kind of liked it because it was like, you're talking to a whole bunch of people from the industry, you're getting to know people, and I got to know quite a lot of self-driving companies that are located in Arizona, And also, where was the other one located? Were they in Vegas? No. I think one of them was located in Phoenix, Arizona. And then another one was maybe Boston or somewhere. It was so long ago at this point, I can't really remember. But I worked with like 3 or 4 different sort of EV companies, and they were doing self-driving vehicles. One of those was a logistics company, so like trucks and stuff, and I just found it so interesting. And just to find out about technologies, because, you know, they put like in the spec what sort of tech they're looking for. But I also had a lot of banking clients too, because obviously, you know, fintech is where it's at. And I enjoyed that. So just having multiple options, multiple skills, I think it made me a better businesswoman, personally, because you get to see other aspects of businesses, but also the parallels. You know, how similar is this to that, and how different is it to, you know, running music, for example, as a business, because I did that for 20 years too. So yeah, I never want to limit myself to a single source of income ever again. So that was a very tough year, because, you know, we were making a lot, but you know, then we kept buying stuff as well. And then I ran into just 1 month where I wasn't even down. I was like flat. I didn't make much. And immediately it started creeping into my head. I was like, oh no, are we going to have money to pay the mortgage? It's like, yes, we have lots of savings, Dee. It'll be fine. No, it was like, it gets into your head. I don't know what it is, but it's like not having that secure income month for month, to me, messes with my brain, personally. So for me, trading profits are windfalls that are very welcome, but I don't necessarily count on them to happen all the time, right? So I'm like, if it happens, awesome. We'll get like, you know, like next year I'm planning to get air conditioning. You know, easily that can set you back like £20,000, especially in this country where AC is not very it's not something that people do. But just the way this house is, we have 2 offices now here. So I have my studio, and my husband also has his office. Both of them get so hot, ridiculously hot. So we can't work when it's, you know, you're melting, you're roasting. So we want to get air conditioning just in those 2 rooms. But then I also maybe want to put it in the bedroom to make everybody's life a little bit nicer, easier. We haven't, you know, I don't know whether the Cavalier is going to survive until then, but it would be nice, you know, for everybody to have a good, sort of a good, cool, you know, air conditioning option during the hot summers that we keep getting more frequently in the UK now. And that's all going to come out of prop. So, you know. But to me, you know, prop trading at this point is just icing on the cake. Bruno, I just saw your gremlins photo. Yes. So this is what Bruno sent me. Trading gremlins. Yes. Let's see. Wait, the master day is 1K. No, it was another account. It was 4K. It's another XFA. But I traded this one as well. However, I traded late in the day. So I jumped on the trend. I think it was like 6 p.m. my time. So I captured 1.2K out of it because that's all that was left in the day. But yeah, I had a lot of stuff this morning. Like I said, the dogs were screaming their faces off because they know today half of the pack. So they go to doggy school twice a week, right? So on Monday, 3 of them go because Cavalier can't go anymore. And they're kind of calmer, you know, and they're not as crazy. But these 4, it's the mom, Crichton, Bernard, and Manny. All of them scream. Lisbon is not very loud, the mom, but the other 3 are so loud. And the driver was late, so she couldn't get here on time. And I'm trying to do the pulling the levels and trying to do, a whole bunch of stuff here, trying to get them ready because it's very cold today. So I had to put them in jackets and they're screaming their faces off. They're running around the house. And then I forgot to give the Cavalier his meds. So it's all a bit chaotic today. So again, I have to be mindful that I'm not fully functional just yet. Maybe after another coffee, maybe after midday, I'll be able to focus. And also doing the whole streaming and stuff, I have to be, my focus is split again with many different things. So I'm an older person, okay? I'm not exactly young, so I'm 45, and my brain doesn't work as well as it used to. So sometimes I'm like, oh yeah, let's do this, and then I completely forget. And I know that I give the Cavalier his meds at 9, but totally slipped my mind. And it's a big priority in my head because I want to keep him alive, obviously. But today it was like, whoosh. So yeah, maybe wake up, Dee, and then we can try and find good trades. Luca saying, hi, Deeyana, Happy New Year. Happy New Year. Are you trying a short? I'm not trying anything at the moment. Micro trades. It's funny how you only become successful in trading once you're tired of your own shit. Some people it takes 5 years, and for someone only 6 months. Yeah, I think that's heavily dependent on what you do in your life elsewhere. All right, so let's go back up to 30-minute time frame here because I'm not seeing. This is a consolidation now. We get consolidations a lot. But what worries me and why I don't think this is a good setup is because we don't have any volume. Like, look at how low that is. So we've had Asia, pretty lively. Again, this is why I've been staying up to trade Asia. Because, they start, and there's clear commitment. And now we get to London. And before LME starts, before COMEX starts, they're just like, yeah, mate, we're going to go for a snooze. It's like, what are you doing? And that's because there's no major exchanges that are actively trading. Like London and Eurex typically trade other asset classes. They trade Bund, they trade DAX, they trade probably currencies, but the currencies are still so dry that they're not worth my time. Like last time I looked at GBP USD, which used to move, 140 ticks. Now it's back down to like 30, 40, maybe an isolated day when there's a release. So that's not worth my time. I don't want to squeeze out 10, 15 ticks maybe, if we're lucky. And then on every once in a blue moon, it's going to move. I want something that moves every day. I don't want things that move, whenever there's a release. That's like, I would trade bonds then. Yeah. Corpora says 20k for an aircon. In Greece, it's like 1/10 of the amount. It's kind of necessary. Yeah, that's the point. So in the UK, it's a moderate climate country. So when I first moved here, 25 years ago, it was neither here nor there. Like the summers, maybe you would have 2 weeks when it would be kind of hot. And, you would be like, oh my God, when is this flaming ball in the sky? Who do I need to sacrifice for it to go away? But then the winters also weren't super cold either. However, because traditionally UK has been colder than what it is now, all of the houses are built to retain heat. So when, for example, another thing that's happening yesterday, my boiler broke down. So at the moment, the way we're heating things up is with a wood stove, an oil heater, and a space heater. And heated blankets. So it's a little bit nippy in here. But we put the wood stove on, and literally the whole place, even though it's a 4-bedroom sort of single-story house, it just went super warm. Super warm. I was panting, dogs were panting, husband was panting, and we were all like, oh my God, this is this is really hot. But the summer, unfortunately, when you have hot days, it creeps into the house. And my entire living room, it's got 6 bifolds, and it's south-facing. So the sunlight is pretty harsh. it just beams into the whole place and you can't breathe. However, because it doesn't last that long, traditionally it was like a week or two of hot weather and then back to rain and cold. Now we're getting more and more summers where it's like 2 months of heat and it's disgusting. However, it's still not a normal thing to have air conditioning in the UK. It's like an oddity. You go to somebody's house, like offices have it a lot. Like every office that I've ever walked into, everybody had air conditioning. But homes is just not something you do in the UK. And on top of that, a lot of the buildings, especially in and around London, they are sort of protected, so there's a look about them, and the councils will not allow you to install split systems. So that kind of aids in the unpopular, air conditioning setups. Some people are now doing water-based conditioning, so they plug it into the water mains. It's like a refrigerator, effectively, and then it blows cool air. But those systems are very expensive. Now, this house, you also can't really change the look of it because I live in effectively a farmland. All around us is farmland now, and they don't want to ruin the look of nature. So you can't put ugly split systems. So we're probably going to have to go for the more expensive option. So that's the reason why the air conditioning for 3 rooms is going to cost us upwards of 15,000 to 20,000 pounds. Pounds, not dollars either. So ouch, it's going to be a little bit, stingy, but it's going to be worth it. So that's something we're planning for this year. And then, my husband is planning a steam room. He wants to convert one of the bathrooms into steam rooms. So, it's a new house. We're planning things. Yeah, so Verti, Annie says, I live in a Victorian conversion. I'm not allowed to have an aircon installed. Yeah. I mean, if you are considering it, look into water-based cooling systems, because that's what we're having to do. And they're, again, a lot more expensive. All right, so this initial balance is still there, but you tell me, what does this look like? Is this a consolidation on no volume? Do I want to be involved in that? No, I want easy trades that are supported by volume. So we need to wait. I'm also seeing the sizes that are being traded on Bookmap, and this is what they look like. Tiny little bubbles. Tiny bubbles. So until those bubbles get bigger, I don't think we've got a good setup here, unfortunately. Not to mention that the level is not there either. So VWAP, reclaim, or maybe even rejection again. But, okay, so here's the third hypo. So first one will be longs from around ballpark Asia low, if price permits, okay? It's not like, oh, it's Asia low, let's go. No, it's like Asia low gets touched, what are they doing there? Then we go back to, let's say, 80. Maybe even go back over VWAP. But then it starts to lose steam because it's already a big move. What would need to happen in order for me to get involved? We would need to break below the call wall. So below 80 again. So it would be an extended move. That could be a short. So an extended messy rejection and reclaim of the call wall after touching VWAP. That's a second setup. If we hold above VWAP and then we pull back to VWAP and we still reject and I see buyers and stepping in, that would be a long that I'm probably going to hold pretty aggressively at least till 82. And maybe if they don't hedge there, and maybe if the time of day it's still okay, maybe even go all the way to Asia high for a liquidity grab. And that would be the end of the hypos. For shorts, again, that's the short idea here. If we go below Asia low, I would probably be looking for a big spike down to a call wall and then a big pullback. And then I would, again, be long. So I'm mostly long, like 3 out of the 4 hypos are long today. So we're not there yet. This is middle of nowhere for me at the moment. We're too far. And with silver the way it is right now, the ranges are so massive. You can't just take a punt here because you're going to lose 120 ticks. And even on one, even on one micro, that's $600. I'm trying to limit it to like $450 per contract. And then maybe scale in a zone to somewhat minimize the stop loss, but then to still expect the same 160 ticks of profit. So you smaller stop, but the same profit increases the profit profile. However, I would like to do all of that here. So I would like to get as close to this Asia low. And what's the nearest round number? We've got 78. So if we touch 78, maybe wick slightly below it, then we claim that. And then we create a decent reversal, which I've shown you in a minute. I've shown you a few minutes ago. Strong 2-minute bar. No selling wicks and volume. Then that would be a good long. But I would still only take it at 80. Just because they might still hedge there. Because it's mean reversions. So what is the profit roughly there? So we have nearly 300 of profit. So that will give me 4R. Not even 2R. And if I get that, I think I'm going to be done for the day. So we'll see. Or if we're not doing anything, we just end up in a neutral day and just... which is probably not going to happen. But we could have a snoozy snooze fest for COMEX. We do have a couple of releases though, so I doubt that we're going to have a super quiet day. But I need to wait for my levels. I've had, like I said, a few big days. I am fully aware of that. I can't start doing stupid shit this week. Because I want this week to keep going into positive. Or limiting the loss. So, if it is a loss... really don't want to lose more than, 800, maybe $1,000. DJ Run says, catching more streams lately and finding lots of value in your insight. Thanks, D. Thank you for being here, DJ Runs. I like your name. But yeah, so we have to be careful. Not every day brings easy trade opportunities. We're still talking with Topstep to move these streams closer to 11. So instead of 9:30 a.m. to move them to 11 a.m. Because that's when the market is like pre-market COMEX. It's pre-market LME. It's like a whole bunch of stuff starts happening. And these streams were supposed to be DAX. And then DAX never came. So now we're watching paint dry on metals. I want to start seeding on X or Twix, however you want to call it, hashtag metal markets. So, because that's what we're doing here, metal markets, right? So I already did that because I post silver levels in like an assessment. I'm not giving you, here's the setups. I'm giving you levels of interest. What you do with them, it's up to you. But so far, they're, pretty spot on. And I can show you that. My Twitter is on the, below this video, I think. Let me just check that. Yeah, so they put my X account there. I don't know why. I don't really post all that much. I also have a YouTube account, which is Marcus Stalkers. Yeah. The bull says no way you're 45. Sorry, mate. I can show you my driver's license. 1980. 1980. Thank goodness for Botox. That's all I'm going to say. Obviously, genetics plays a part. Most of my family looks pretty young, but I, being a musician and having a nightlife and being always, cameras in my face and everything. So I did start. I'm going to be super straightforward. I started with Botox at 29, and that's kind of how my face stopped, right? So when I started with freezing my overactive movement, that's where my face stayed. I obviously have a good skincare regime as well. That is very important. But I also think it helped that I looked like a child until I was about 35. Even up until like the last 5 years, I think, they were still trying to ID me from buying alcohol. It's like, are you over 25? So I was like, yeah. It's very annoying not being able to buy booze at 40 years of age without ID. So yeah, I wish I was in my 20s. I am not. And the reason why I always say that is because people think I'm a kid. And then when I say, I've been doing this for 19 years, and they're like, oh, you started trading at 9? I'm like, yes, I started trading at 9, because that's legal. And I'm also pretty slim, so I think that adds to, yeah. Do you change the VWAP value between sessions? So I am on the Globex VWAP. So that means I started for Globex. I am only interested in session VWAP, and yes, I am on OH. I prefer this one because it's all 4 divided by 4, so it's a proper median average. The other one is like open, high, low, close. It's like, great. Somehow that is not nearly as accurate. I find that this one, on certain products, like for example, copper, almost to the tick, man. It just like hits it and then just goes away from it. And just like, it's like, maybe I could show you that yesterday. Actually, it happened. So let's have a look at yesterday. Here it is. Yeah. So pull back, almost to the tick. This is like not even like a couple of points, and then immediately it just. So I like that on at certain times of day. That my open, high, low, close divided by 4 VWAP from Globex is so reactive. But when it comes to session VWAP, which is what you're talking about, I only look at that if we are in a heavily range-bound day. So we're opening inside value. We probably extended the initial balance to both sides immediately. And then we basically just look at the edges of that and then using VWAP as a target, if that makes sense. Yeah, Bertie says, I still get ID'd for booze, so we're the same age. Yeah, it's great. So is VWAP value or parameters, this will be the last question, by the way. Is VWAP value or parameters also consistent between metals and indices? Yes, I'm testing it using HLC divided by 3. So VWAP is VWAP. It's an average with a volume added component. As such, it will always have a reaction. How much of a reaction really depends on how price reacts, whether it's going to touch it, overshoot it massively like it does on NASDAQ, and gold. Actually, gold likes to overshoot VWAP and then reclaim. Or on some of the more stable products like crude oil or copper, whether it just touches it and then immediately gives you what you want, it will be down to context. So, for example, if I'm looking at longs in silver and we are above VWAP, I would expect VWAP to be reclaimed. So again, it's the same thing. But Globex VWAP, to me, has more value in trending markets over session VWAP. Session VWAP, to me, just gets run over a lot. And only really useful as a target when we are in a range-bound market. All right, that is it for now. I will see you tomorrow for... what's going on with my voice? I will see you tomorrow for another Euro trade, and I will also see you for the first hour of Fast Markets on Friday. In the meantime, let's see what the metals bring us the closer we get to COMEX, and after all of these releases are done. This is the NFP week as well, so they might be waiting. But I do think we're going to have more movement later on in the day. Right now the volumes are still pathetic, and we want to wait until the volumes increase, and then we have smoother movement, rather than watching paint dry. That's all I have for you today. This was the Euro Trade on TopstepTV, and I will see you very soon. Take care.